let's move on and talk about the big rout that we had in global technology names. It spared literally no one, whether it's a Salesforce, whether it's a Gartner down, even across European markets, and the Indian ADRs too saw a very large slump of about 4.5–5%. Moshe, Katri, Managing Director, FinTech, Tech-Enabled Services, Investment Banking at Wedbush Securities, is here with us on the show. Arvind, Managing Partner, Geosphere Capital Management, also joining in. Gentlemen, thank you very much for joining in. Arvind, let me begin with you. Your first initial read on the tech sell-off. Is it just because valuations had run up so much, there was so much hype surrounding AI that some of the froth got taken off? Or what we've seen from Anthropic's Claude plugins, the new developments, the new updates, is actually going to put many of the services software models at risk, and therefore there is a real downside earnings pressure, and valuations rightly need to be corrected?
Well, the SaaS companies in the US have been for sale for the last several weeks and are coming close to the April last year, lows when we had that major correction in the overall market during Trump's Liberation Day. So they're almost back at those levels. They're reporting good earnings and the stocks are selling off. So this is not about current earnings. This is about concern about future growth, future value. And so finally, I think people have now started worrying about different segments, and IT services, the latest ones to get this concern, because the SaaS companies are going to see, disintermediation by AI and by AI agents and by AI software. Then at some point, people are realizing that, even the software services companies are going to suffer in this same issue of can agents do the work and how much will be the value of IT services companies in that new, if that's the new world we're moving on into. And again, this may not be a one-year call, but this is a 2, 3, 4 year. There's real headwinds emerging that could be very meaningful.
So today's developments that came over the last few days largely targets the SaaS companies, ServiceNow, Salesforce. But the fear is that in the future, with the way tech is developing, it will hurt even the Indian IT outsourcing companies. Is that the correct way to look at it? Right now, there's no risk to IT services. Today's revenues don't shrink. Moshe, you want to come in? And yeah, go ahead, Arvind.
Yeah.
And
Moshe, no, go ahead, Moshe.
Sure. So it wasn't only Anthropic, it was also Gartner that reported numbers this morning, and they took numbers down for calendar 26. So maybe that's more related to the tech-enabled services kind of sector. But look, Rima, we've been talking about the cannibalization and the disruption of AI for about 2 years now. Ultimately, the proof's going to be in the numbers. I just want to, factually, if you look at most companies reporting in the past few weeks, they've done better than expected. Guidance looked better than expected. So I don't know. I think we've been talking about for 2 years. The disruption has been going on. If we actually get to a better trajectory in terms of revenue growth for the space, I think that'll be, and we should be in an okay shape. The volatility is just insane, and I don't know if that necessarily reflects fundamentals at this point. That's my point of view here.
Yeah. Okay. So, gentlemen, morning, Moshe and Arvind. So let me play the devil's advocate just a quick. I've got a couple of questions. So Anthropic is coming up with a large fundraise round. I remember Ken Griffin at Davos from Citadel saying that all these companies have raised hundreds of billions of dollars, and that's one view, and they've got to promise the moon to change the world. Otherwise, they don't get to keep the money. You think there is that element as well? A bit of an oversell? A quick word, Arvind.
I'm not so sure. Anthropic's revenues grew tenfold in the last 12 months. And from what I've read recently, they're talking about another 5 to 10-fold increase. And it's not from small numbers, from 10 billion going to 50 billion. So these are not small numbers anymore. And they're still growing at a dramatic pace. So I don't think Anthropic is the one that is overpromising. I think the thing we have to worry about is, are there going to be some of the legacy companies that are going to be losers in this? And clearly, Anthropic is introducing more and more capabilities that are causing concerns about future growth, not about current growth, but in the next year or 2 years. I mean, just take the Indian IT services companies. They're trading at 20 times earnings for 7-8% earnings growth. And what happens if that earnings growth disappears in a couple of years? So, while I agree with Moshe that right now the earnings are fine, but the pace at which I believe that AI is developing, I think there's a real concern that disruption is around the corner. Now, maybe it takes a little longer than people expect, but the fact is it's a matter of when, not if.
Moshe, the general understanding here in India, I can tell you amongst investors, right, is that Indian IT services companies are going to be indispensable in integrating AI into enterprise workflow, etc. I think what was different last night, and perhaps is essentially because it's not general assistants trying to do everything, right? These are specialized plug-in tools for a variety of functions. So is that thesis that Indian IT services companies perhaps are not the inventors and they don't have the foundational models, but they will adapt and help global enterprises, integrate this system, these AI tools into their workflow? Is that thesis correct or flawed, or is that thesis at risk? Moshe.
Two things. One, I do agree with this thesis, but before that, going back to your question about the bubble and overpromising, we did see throughout calendar 25 that I would say a big chunk of those AI initiatives really missed their target. So the real question here is ultimately, what's the ROI on all that spending? So we're yet to get there. So I'll just leave it here. This is kind of one argument that I would kind of leave it here. The second thing regarding your thesis, we do believe that there's going to be a spending cycle that focuses on integration, on data. In our view, the sector is very well positioned from the infrastructure side of AI, massaging the data, preparing it to basically to get fed into those accelerators. So we do feel that there's a very important role for the sector to fill in, but it's going to take some time until those projects really gain traction and gain critical mass.
Moshe, so your view, just to be clear, is that there is, simply put, I know I'm reducing it to a binary, but the sell-off is a little overdone. Is that what I'm just trying to get that out of the way.
I think the sell-off is overdone, especially given what we've seen in the past few weeks in terms of the earnings and in terms of some of the initiatives that companies are actually going through in terms of reskilling and in terms of repositioning their models. Absolutely.
Moshe, any conversation with investors regarding the Indian IT services companies? Because here, it's not that earnings are beating expectations, like we've seen in the case of global tech majors. So what about the sell-off that we've seen, the underperformance of Indian IT companies?
The underperformance continues to be a function of sentiment. And the sentiment has been negative for 2 years, Rima. I don't think that's changed. And that's why I said the focus will be on guidance for the year. Calendar 26, fiscal 27 for some of the other companies. This is really going to be the proof, and the proof whether these guys are doing better or not. And from what we're seeing, it seems that the next 12 months will probably be better than the last 12 months.
Yeah. Arvind, you've got a view on global markets. Are they? We've seen these pullbacks. All of them have been short-lived. Do you think it's possible we get one more of those?
Well, I think the broader market, today was just a modest sell-off, right? It wasn't anything dramatic. So I think for the broader market, things are still going okay. I think there isn't any cataclysmic or any major concern. There was a little bit of a concern about whether there's something going on with Iran. There was a drone shot down. There were some minor concerns. I don't think the broader market has any smoking gun negative thesis out there. I think, yes, the leadership has changed. So you're seeing, the Russell 2000 outperform NASDAQ. Could that continue for some time? You're seeing the metals and resources start to do well, as people are realizing that all this AI spending is going to require a huge amount of resource, usage, whether it's metals or it's energy or what have you. So I think just because the leadership may be changing a little bit doesn't mean that the market is in trouble, but it's just that software has become or the whole Mag 7 has become such a poster child for people assuming that that's where the market goes. The reality is the equal weighted S&P or the Russell 2000 are actually doing fine.
Well, it's a debate we'll keep having, Arvind, but thank you so much for coming back on after our midnight chat the other day. Good to speak with you. Thank you, appreciate it. Moshe, it's always a pleasure to speak with you, and we'll request you to come back as we track how this story progresses. But good to get a wide range of opinion on this one.